Well, shifting focus to the energy markets now, the Strait of Hormuz may be far more open to oil traffic than previously believed. The U.S. Energy Secretary Chris Wright says that an average of 9 million barrels of oil a day moved through the strait over the 7 days to August 8th. That is almost half the 20 million barrels a day that crossed Hormuz before the Iran war. But this estimate is sharply disputed. Shipping trackers, including Kepler and WION, put direct tanker flows close to 4 million barrels a day, while roughly 7 million barrels are being moved through pipelines and other alternative routes. That would put the total Gulf exports at around 11 to 12 million barrels a day. That's well below pre-war levels. The disagreement is largely because more tankers are switching off their transponders and operating as so-called dark or shadow ships to avoid any attacks. The header tanker trade has become a crucial lifeline for global oil markets. Producers including UAE, Iraq, Qatar and Kuwait, they're using ship-to-ship transfers with tankers moving cargo through Hormuz with their locations concealed before transferring the oil outside the strait, particularly off Oman. Kepler estimates that around half of the Hormuz traffic it tracks is now made up of shadow transits compared with about 1/8 of a month earlier. Saudi Arabia also appears to be preparing to expand such operations with 16 supertankers positioned off Oman, capable of carrying around 38 million barrels. The flows are helping prevent a much larger supply shock, but they come with significant risks. ADNOC says that 23 of its vessels have been attacked, resulting in 1 death and 20 crew injuries. The continuing oil flows have helped keep Brent crude largely between $80 and $90 a barrel. That's far below the $150 level that some analysts feared when the conflict began. But the market is consuming its reserves. Global oil inventories are estimated to be 1.5 to 1.9 billion barrels lower than at the start of the war. That means the longer the supply deficit continues, the closer the market moves toward a point where inventories may no longer be sufficient to absorb disruptions. The US says substantially more oil is leaving the Gulf than tracking data suggests, while the EIA continues to describe Hormuz traffic as severely constrained. The real test will come over the next several weeks when today's shipments begin appearing in import data, and if those numbers confirm higher flows, the market may have underestimated supply. And if they don't, the US administration claims will face greater scrutiny, especially as American gasoline prices remain above $4 a gallon.